What's up, everybody? Happy Friday. Hopefully everybody had a good week. It's been definitely an interesting 2 weeks for me with the new baby, so I appreciate everybody being patient with that, but I'm excited to start doing the Monday shows regularly again starting next week. But we decided to do a Friday show today just to go over some charts into the weekend and into the middle of July. So if you guys have any chart requests or anything, definitely just post them in the chat. I have the chat here on my phone that I'm looking down at from time to time, so you can definitely check that out, or I'll check it out and you can send some requests. But as always, we will go over the broad markets, go over some crypto, just to get an idea of where everything is currently in the market. And so the main thing on SPY is really just this perfect move up to this 1.618 extension over the last week or so. And you can see that we pretty much rejected almost perfectly there before pulling back almost perfectly to this previous resistance area. So anytime you have a breakout, this is exactly what you want to see. You want to see a retest of that breakout point. Sometimes it's not going to be perfect. In this case on SPY, we missed this resistance line by, I don't know, 50 cents or something. And one thing to mention, anytime that you do have a move like that, remember, you can always use these zones that we have on TrendSpider to easily capture some of those moves. So you don't have to be right on the money. So you can see as I move this sensitivity to the right and the left, you would have been able to capture that that interaction with the zone around the trend line instead of just getting that, let's say, an alert right at that line. So all in all, we bounced pretty nicely yesterday, right above that line, and then hitting new all-time highs again today. I see a lot of people just looking for a crash or looking for a reason for the market to pull back. And one day there will be a reason. Is it Monday? Is it next week? Is it in a month? We'll have to see. But I will go over some seasonality statistics just to kind of compare and complement the technical analysis side of this as well. So on the daily, we're starting to get through that 1.618 extension. If you do want to see where the measured move is, I don't like to have these two horizontal lines here. It just kind of crowds the chart. So you can see this is the starting point. This is the ending point for the measured move. This is the 1.618 extension. If we did want to, let's say, add a 2.618 extension for a continuation up, we can always just go in and add that. The 2.618 extension would be, let's see, where is it? Where is that, the 2.618? Oh, wow, they're way up there. I was wondering where they were. Yeah, so I mean, if we continued up and you're using the extension from this measured move, the next 2.618 extension would be around 450. So remember, the market can stay overextended longer than a lot of people think. So all in all, I'm definitely not thinking that we're going to hit 450 next week or anything, but that could be a new target as an extension above. Now, on the weekly side of things, I had talked about this launch pad forming. The launch pad is something pretty much that's just a bunch of volume nodes creating a volume shelf. And remember, a volume shelf is just part of the volume by price. So a lot of people will ask me, how can I turn on the volume shelf in TrendSpider? And there is no volume shelf indicator. It's called the volume by price. So if you do want to add that to your chart, you just go to indicators and then you type in volume by, and it will just come up as volume by price here. And then the settings I use are 50 columns. So we're measuring 50 different price ranges across a specific amount of time that we're anchoring from. And then all I have turned on is the columns. I have the column opacity turned all the way to the right, and I have everything turned off other than that. For me, anything turned on other than the things that I have on are just noise. So for me, the main thing that I was watching here is the fact that our point of control and another big volume node here were forming since the COVID lows back in March of 2020. And you can see this acted as essentially a launch pad for price. So this becomes a base for the price. And over the last 3 weeks, we have moved up pretty strong off of this area. So all in all, definitely looking pretty strong. I mean, if we did pull back, it would probably be down to this launch pad area around 420. However, this is a pretty strong daily candle, and we did already retest that breakout point. So the markets are looking really strong going into the week ahead. And if you look at the seasonality for really any of these ETFs since 2016, July has a 100% win rate for the Qs, for SPY. So this is a very, very strong time of the year. Going into August, it's also a very strong time of the year. And then going into September and October, that's when things definitely do get a little less high on the win rate. And remember, when I say 100% win rate, that simply means that over the last 5 years, July has a 100% win rate, meaning that it closes higher 100% of the time over June's close. So this is not necessarily telling you there's a 100% chance that the Qs or SPY will close green in July. It's just telling you that over the last 5 years, and it says 6 years here because technically this is the 6th July, but we're not done with the month of July, so it's looking back 5 years. 5 out of 5 times, July has closed higher than June's close since 2016. So pretty strong seasonality. And one thing to keep in mind is that that lower seasonality win rate in September and October. But all in all, definitely strong breakouts across the board. One thing that I'll mention here is just if you are looking at a breakout point where you don't really have a point of reference, since there are no other points of references. For example, here on the Qs, we have not had price action up here before. So this is when you really want to use a measured move using Fibonacci levels. I use the measured move from this point to this point. Let's see, actually, what measured move did I use? Pretty sure it's this one right here. But the extensions are definitely the way to do it. So yeah, the 1.618 extension is above. That was the target, and that's exactly where the price moved up to. And I used to not believe in Fibonacci levels at all. I was like, this is really just some weird voodoo. But I did have a couple people who did teach me the right way to use fibs, and I literally use fibs all the time, especially for targets above, for extensions and that type of thing if there's no previous price action there. So all in all, this is moving up very steadily over the last month and a half, and it doesn't look like there's any signs of stopping here. You can see that we did have a little bit of a pullback from that 362 area, but all in all, if we can get above the 1.618 extension, it would definitely be a continuation, possibly higher. Now, if we were in a perfect world, you do want to see some type of pullback, kind of like what we saw on SPY. So on SPY, we definitely pulled back a lot closer to this previous resistance than we did for the Qs. So this would still be a target below, possibly, if this did roll over. A lot of people will say, well, last week's analysis was really bullish, and then this week we're having a red week. You have to just let price action do its thing. Nobody knows what's going to happen next week. You only have technical analysis, seasonality, these things that can give you an idea of what are going to happen. You always have to take price action into account and really look at price action over anything else. Seasonality is great. Other ways of looking at the market are great, but you have to take into account what's happening now. And if price action is saying we're breaking down, then you have to take that into account. And you can't just say, well, last week it looked bullish, so I'm going to continue to be bullish. If the price action doesn't look bullish anymore, you have to change with the price action, or that's how you get burned. So the Qs, as I mentioned, really strong move over the last couple of weeks. IWM has been one that's had some trouble. However, IWM is looking very strong going into next week. So you'll see here that we've pretty much been range bound on IWM for, I have 5 months here, but it's actually closer to 6 months. And so, we need to break the 234, 235 area and close above it for this to really get some type of bigger move. Now, if you're looking at the weekly chart, you'll see here that I do have the volume by price anchored from these COVID lows. You'll see that I have this kind of symmetrical triangle type of pattern here that I'm highlighting, and you can see that we did break down through it this week. intra-week, but we are closing possibly above it. You can see we've got this volume shelf, very similar to what SPY looked like before we made the move higher. And so if we did take this measured move from the bottom of this this pattern up to the top, and then applied that to the apex of this pattern, this 285 area above would be a target for the much longer term. So whenever, especially on the weekly chart, if you're giving targets, this is a target possibly for months down the road. The weekly chart can't go straight up. You're not going to see a weekly candle on a ETF that goes up 22%. It's just not possible. I guess it is possible, but it's, I'd say 99.9% unlikely to have that big of a candle on a weekly candle. So we've got the launch pad here. The volume shelf is definitely proving, and the point of control proving itself as an area where buyers are stepping in or supply is simply just drying up. And so if we did break out of this resistance, the longer term view would be around this 285 area for maybe later, much later this year or sometime next year. So that would be a pretty big move. We've already had a pretty strong move over the last year. And so it's not shocking to see some consolidation. So, and if we do start to break out, I'm definitely going to start getting more bullish on small caps again. And this could be a time to start buying some small caps. And we'll go over some different small caps into the week ahead. I generally don't like to look at small caps below 100 million market cap, because at that point, there's a lot of liquidity issues. Technical analysis just doesn't work as strong. And so that's why I like to look at small caps over 100 million at the smallest. And so we'll go over a couple examples of that. Before we do that, I did want to go over an example on Amazon. So IWM, we've been range bound for this long, but then you look at Amazon and you'll see we were range bound for almost a year before we finally broke out here. So these consolidation phases can take quite a while. And you'll see here that we finally broke out on Amazon. What was this? I guess earlier this week. Been kind of crazy with the new baby and all, trying to figure out what day it is right now. But yeah, I guess that was earlier this week. We finally got the breakout. And so now this is a very, very strong chart going into really the rest of the year with this breakout. And you can see here we've got this strong volume shelf. We broke out. If you look at the monthly, this is when it really gets interesting here. So you'll see here that we can anchor the volume by price from the 2018 lows, which was a huge pivot for Amazon. And you can see that we do have a nice volume shelf kind of launch pad here. This is the measured move I measured. So that 1.618 target above, which is similar to what we just did with SPY, would be right around 39.75. Let's just call it 4,000 above for Amazon, and that's a psychological level. But all in all, what I wanted to point out here was the fact that these range-bound horizontal kind of periods can last a while. So keep that in mind with the IWM, that this can, just chop around for much longer, as we saw on Amazon here. Now let's go into VIX. VIX is one that I just want to look more at the seasonality. A lot of the time you can't really do a ton of analysis on the chart for VIX. The VIX is derived a lot more than just from price action in the chart. So it is hard to kind of chart that out. But seasonality is a great thing to use on the VIX. Now, one thing to keep in mind for the VIX is the fact that into August, and this is kind of a very interesting statistic, because into August, you have a 100% win rate. So that means over the last 5 years, every August has closed higher than July's close for the VIX. Now, going into September, we mentioned for SPY, that's a relatively, more SPY in the Qs, a little more of a down month compared to some of the summer months. But you'll see that that September actually has a 0% win rate for the VIX. So that's something to keep in mind as well. Notice October does have a big spike there, but all in all, the VIX, it's not shocking to see the VIX absolutely melting. I mean, since the start of 2021, Friday has a 23% win rate. So Friday is definitely the weakest day of the week so far this year, and that's pretty evident with the VIX absolutely melting today. So just wanted to point that out on the VIX side of things. Let's see. Going into more broad market stuff, you've got Bitcoin. That is what I would call pretty much broad market at this point. So you can see here BTC USD. This thing has been stuck now for quite a while. I have a swing high anchored VWAP here. You can see that this is getting a little tight on the daily side of things. We're starting to coil a little bit. Some people would call this possibly a bearish pennant. And you can see here that, you know, it's something that could break to the downside, but at least for now, the daily candle's looking pretty good. On the weekly side of things, you'll see here that if we anchor the volume by price from the COVID lows, there is a little bit of a volume profile forming here. And we'll just have to see kind of if this holds. If we don't, the anchor VWAP from the COVID low is still right around 26.7 or so. So keep that in mind. It's all about kind of the weekly close here and where we close. If we did close pretty much near a weekly low here, that wouldn't look great going into the week ahead. Going into Ethereum, I'm not going to go over too many more cryptos here just because Ethereum and Bitcoin kind of give you quite an idea of what's going on. Ethereum, you've got this swing low anchored VWAP that is holding kind of relatively well. You can see that we did break down a little bit through it, but we are still above it for this week. For today. And you'll see that there's a nice bounce, and we'll just have to see what happens going into the rest of the week. Now, on the weekly side of things, I have been looking at this longer term support line here as kind of your make or break. And for now, we are staying above it. So until this really breaks down through this lower trend line, that will kind of be your make or break. But for now, it is holding pretty well. So that is Ethereum. And let's look at some individual names. Before that, I am going to go through the chat just to kind of go and see if there's any requests. Let's see. Yeah, we'll go over Wish. Wish is one. I mean, I've been doing updates on Wish mainly because everybody in FinTwit is talking about it. I have a very small position in Wish because it is a little scary how many people are in that. I did a video on it last night, and my main thing was, you know, in an overcrowded trade, which I think Wish is probably getting pretty overcrowded, you know, where is the next tranche of demand going to come from? If everybody already is all in Wish, where's that capital going to come from? So Wish is one that I have a very, very small position in, just to see where it goes. It's one of those ones that has worked really well on the technical side. So I started looking at Wish a couple weeks ago, and you know, just the levels with volume shelves, anchored VWAPs below, it was really kind of working very well. So you know, that's why I've been covering it. I'll go over the chart, but as I mentioned, it's not something that I'll get too involved in, at least for now, because it's just talked about so much. But I also like to give analysis on stocks that are talked about a lot, because I want to maybe give another perspective to those that may be a little too emotional about their position in something like that, that type of thing. So we'll go over that one shortly. I do want to go over Tesla and a couple other names first, though. Tesla, yes, I'm going to go over that one. ATOM, definitely going to go over NNOX. Yeah, we can touch on AMC. So let's jump into Tesla first and kind of look at what's going on Tesla. Tesla, I mean, Tesla is a very, very, what's the way to say this? It respects supply and demand zones very well. So I've been posting this chart now for the last couple days, and you can see here that I've got the swing low, I've got the anchored VWAP from that point, and I do have the anchored volume by price from this swing high, because you know, if we're measuring from this point, you could do it from the swing low because there has been quite a few days. And I had a question about this, you know, when do you anchor from the swing low versus the swing high? So I personally generally will anchor from the swing low if there's enough days that have gone by. Now, one reason why I wanted to anchor the volume by price, at least from the swing high here, is because you can see that, I wanted to get an idea of where some of this price action and how much volume was occurring up here to get an idea if this did break out here off this volume shelf, what would be the next area of supply. But it didn't. This volume shelf ended up being a little bit of a distribution zone for now. And you can see we moved right down through the volume gap, bounced perfectly at this anchored VWAP swing low, which was also in confluence with this this next volume node below, kind of this next volume shelf. And we got that bounce right at that area yesterday. And you can see that we were able to move pretty quickly back up because there's not a lot of liquidity here. That means that there's not a lot of shares holding within this orange shaded area, which allows the price to move very quickly both to the downside and the upside through those areas. And so as far as the weekly goes, you'll see here that, let me turn off the volume by price. The main thing to really keep in mind here would be the anchored VWAP from the swing high. You'll see here that we literally got rejected right at it again this week after being rejected for the last 2 weeks. And so that's definitely something to keep in mind. Until we can break and close above this anchored VWAP and this trend line resistance, that's going to be the kind of area above. Now, if we do break above that area, you definitely want to watch this target above around 750, simply because this was the previous area where we topped out on these wicks. So that's where the target is coming from, simply just these this previous pivot here. So Tesla, your main thing that you want to focus on here is the fact that we need to break through this supply zone above, highlighted in blue. So we need to close pretty much above 690 and pretty much this previous high. So around 700, and that's a psychological level too. So you need to break above 700 on Tesla and close to really get this move going again. On the weekly side, as I mentioned, the anchored VWAP from the swing high is the main thing that you want to watch here as well. So before we can even think about getting through 700, we need to get through around this 680 here, which is that anchored VWAP. So that's Tesla. Let's see. I can try to zoom in a little bit. It just makes the quality better. So hopefully this may be a little easier to see. Windy. Not sure, but it does make the screen a little more fuzzy. But hopefully that helps. Let's go into Wish, I guess, next. This is one that has just gotten beat down the last week and a half after hitting this previous high. Now, I rarely use the 4-hour chart. The reason I have here is just because it's been working really well on Wish. So Wish is working on potentially breaking out of this this falling wedge on the 4-hour chart. And you can see here that we do have a little bit of a volume shelf forming here. You can see that I've anchored from the swing high here. So if we do break above this area, there's not a ton of volume until we get to around really this node around 1160 to 1180, and then around 1220 to 1230. So if we did start to move higher, there's not a lot of liquidity above until you get to around 1160. So you'd really want to see a close around above 1125 on the 4-hour chart for this to possibly make the next move. Now, on the bearish side of things, you can see here that this is not what I'd call the strongest weekly candle here, but you can also see that we're kind of just consolidating after a huge run and just kind of resetting a little bit. So let's see. Let's see number. Yeah. So anytime I go over these levels, I'll mention the numbers for those that can't see. So Wish, as I mentioned, you need to get through 1125. If you do, 1160 to 1180. And then your next big node would be right around this 1220 to 1250 zone. So the main thing that I really like, though, is the monthly chart setup. So you can see here that there's not a ton of monthly candles to go over on Wish. But if you look at the raindrop chart, there was a pretty solid volume-backed breakout last month. So that is something to keep in mind. It wouldn't be kind of out of the ordinary to pull back a little bit after that big of a move from 763 all the way up to around 15. So, you know, a lot of people just constantly want prices to go up, and that's just not how the market works. And so wish you definitely have this longer term breakout. We'll just have to see if it does continue to the upside or what happens here. Regardless, you just have to follow price action and do what's right for you. And this is actually a pretty big market cap, relatively speaking. I mean, I think it's like 6.5 billion. So it's not a small, you know, company. So it does take a little capital for this type of stock to move with that size of a market cap. Let's see, going into snow. Snow is one that finally is breaking out. It's about time. Wow, continues to move. So if we go to the daily chart here, you'll see that we finally broke out of this. Let's get rid of some of this stuff and make the chart clean. Yep, so you can see here that we did break out of this ascending triangle. A really strong move here, pretty much straight up from 235 all the way up to 265. And you know, you have to remember on pullbacks, a lot of people think, oh, this is red, it's going down now. This is a great example of this literally went from 235 to 265 in 4 days. So just because the stock pulls back doesn't mean it's over. You know, you still have to use your levels, and this is a great example of a pullback and then a very strong move to the upside. Now on the weekly chart, you'll see here, and this is something to keep in mind. One, if we anchor the volume by price in the anchored view app from this swing high, you'll see that, you know, we've got this kind of launch pad volume shelf forming here. So this is finally starting to actually be a launch pad, creating that base for price to move up off of. Now, one thing I would mention, at least on the weekly raindrop chart, not a ton of volume profile up here for now, but remember, it only started to break out today to these new levels. So, you know, sometimes if you only have 1 day of price action up here, you're not going to have this, you know, that bulge of volume that we look for on the balloon breakouts. So either way, this looks pretty strong going into the week ahead. This is still down huge from the highs back in December. If we anchor a VWAP from this point, notice that we literally moved up right to that all-time high anchored VWAP. So if we do want to continue higher, you definitely want to break this all-time high anchored VWAP. So a close above, let's say 270 would definitely do the trick, I think, going into the weeks ahead. So all in all, really strong breakout here on the daily. And then you can see on the weekly side of things, we literally just start trading right at that all-time high anchored VWAP. And remember, this is the average price per share paid since the all-time high. So why would this initially act as resistance? Well, if this is the average price right around 266, some people are going to finally break even, and as they break even after dealing with a pretty big drawdown, that's when some people take some shares off the table. That creates supply on the market. That's how resistance forms, and that's how this can become a level of interest, at least at first, kind of as a resistance point. So snow, let's close above the anchored VWAP, and that's when things get interesting. Next one is NNOX. This is one that I watch pretty often. I just haven't traded it too often after just it absolutely getting killed over the last few months. But it is on my watch list. I like to provide charts for people who are watching this one. In this case, you can see if we anchor the volume by price from this swing low, we are finally starting to break possibly through this this flag. So we really need to break through, let's say, above this resistance line, which is at this point right around 31.75. So until this breaks above 31.75, it's still kind of within this flag. But you can see this is another great example of this volume shelf kind of creating a base for the price to move up higher. Now on the weekly chart, not what I'd call the strongest weekly candle here, you can see that you do have a little bit of volume at the bottom of the range. But if we go to the monthly chart, you'll see that it looks like we are trying to finally bottom here. There's still quite a bit of time on the monthly chart. And that's why you really don't want to look at the monthly chart in too much depth until you get a little closer to the end of the month. But you always, there should be no rule. A lot of people say, well, you can't look at the chart until it's closed. You can definitely look at whatever time frame you want to look at any time. If it's just opened or if it's about to close, you can still get some good information on, is this about to break out? AMD was a good example of this last month. If we go to the monthly chart, I was looking at this breakout here like in mid-June, and that was right when we were breaking out here. So around, let's say 83, 84. So, the fact that I was looking at the monthly candle before it actually closed gave me a big heads up that we were breaking out of this this kind of pennant forming here. So you definitely want to keep an eye on these longer term charts, even though they haven't closed yet. So AMD was a good example of that earlier. But let's go back to NNOX and just finish that one up. The main thing, as I mentioned, you want to see a close above, let's say, really you'd want to see a close above 31.75 to really get this thing going. And I just have that volume by price anchored from the May 14th pivot. Going into the next one, let's do Disney. Disney is one that's finally forming a pretty nice setup here. So you can see here on the weekly chart, you can see that if we anchor from the swing low here, let's turn off the volume by price on the daily chart. So the main thing that you'd really want to see here is a break above this resistance line. And you can see here that the reason why I chose this particular data point to start at is because notice how many times the price has respected this area. It's been quite a few times. If we anchor from, or if we start from this point here, you don't have as many points. You only have, really this one point right here. So all in all, if you draw a trend line from this high and a trend line here, the main area that you're really going to want to have to break through is right around 178 on Disney to really get going. So Disney does look pretty good on the weekly chart. It's definitely one I have my eye on. You got the volume shelf forming here, shown by the anchored volume by price from the swing low. And you've got a pretty strong wick here showing that buyers definitely stepped in, or as I always say, supply simply could have just dried up here, because at this volume shelf, when the price is trading right here, most shares from the swing low, as you can see, are trading right around break even. So if everybody's holding at break even, supply dries up because nobody's selling anymore, because nobody has any profits to sell. So, a lot of people look at wicks like this on the weekly for Disney and say, well, yeah, buyers stepped in. Probably partially that, but remember, supply also has something to do with prices moving. So just because you have a bounce, remember, you can have a bounce simply because supply dries up, rather than that being a function of demand increasing. So we'll have to see where this closes, but all in all, looking really good. If we anchor a VWAP from the high here, this 183 to 184 area would be your target above. This was actually one of my favorite setups going into this week, but we did have a little bit of a pullback. So this one may be a little bit of a longer target here. Maybe in the next couple weeks we get to that 183 area, which isn't a huge move on the actual spot price, but this is a fun one to trade options on, simply because generally the implied volatility is pretty low. So when you do get a move, you do get the IV spike, which is what you want if you're trading premiums. And remember, for those that are watching, if you do want to do any chart requests, just let me know. Really appreciate that, JD. Thank you. Hopefully this is helpful for you and everybody else. But I have a couple more that I want to go over. PLTR, before I take a request, that is. PLTR, this thing is just pulled back like everything else pretty much in growth. That's had a pretty tough last week and a half. The main thing to watch on PLTR here is this swing low anchored VWAP. Remember, the anchored VWAP from the swing low is we're just measuring the volume weighted average price from when this trend changed. So in this case, as everybody had profits, and the price got back to that average price per share paid since the swing low, supply dries up. So it's not necessarily that buyers stepped in at this anchored VWAP. It could simply mean that nobody has any more profits that have participated since this low point and this trend reversal. And so supply dries up, and that's how you get a bounce. It's not always about the demand side. You always have to remember supply and demand curves. Supply and demand curves, if you have an increase in supply, that shifts the supply curve, and you can get an increase in the price with demand staying the same. So just keep that in mind, because there's a big fallacy in the market about, oh, buyers have to step in for the price to move up. Not necessarily. Now on the weekly chart, if we are looking at the volume by price from the IPO, you'll see that we're pretty much trading right at that volume shelf here. So initially this was kind of a little bit of a launch pad for price, at least for about a week, pulled back, and now we're right back to this volume shelf here. So all in all, if we did continue to break down, this trend line below, let's say around $21, would be a target below that possibly could get tested. And this is healthy. I mean, 1, 2, 3, 4, 5, 6, 7 green weeks in a row. You can't just keep having green weeks in a row. You have to have some pullbacks and some healthy resets for the price to go higher. So the price pulling back is a good thing. It's not a bad thing. You have to have new buyers at higher levels to create these levels for people to be holding at. So anytime you see a nice run like PLTR has from the lows of 17 all the way up to around 27.50, it's healthy to have a pullback. So just remember that. And on top of that, you do honestly have a little bit of an inverse head and shoulders forming here as well. And so, that is definitely a setup to keep in mind going into the weeks ahead. The previous low is right around 2020 for part of this shoulder, let's say 21. So 21 could definitely be an area where that's just kind of forming that right shoulder here. So we'll have to see. So we've got a couple other names here. Let's go over a couple more. Big C, Big Commerce is one that I like to watch a lot. Big C is one that's got a really nice case study on looking at a volume shelf turned launch pad here. So if you do anchor the volume by price from the swing low, you'll see that this volume shelf, this area with the point of control, and the point of control, if anyone's not familiar with what the point of control is, it's just the biggest volume node on the volume by price. So in this case, let me move this green thing. So here, this is going to be your point of control because this is the biggest volume node out of all of these volume nodes. The farther out it sticks out to the left, the more volume that's holding at that price level. So in this case, we've got the point of control, but we also have another very big volume node here that's pretty close to the size of the point of control volume node. So this creates a base for price. All you need is a little spark in demand, and then you get that nice explosive move to the upside like we've seen over the last couple days. On the weekly chart, you can see that we're finally breaking out of this longer-term downtrend over the last couple weeks. Now, the main thing you'd want to watch here is really a pretty strong close above this swing high, pretty much the all-time high anchored VWAP here. So you can see the anchored VWAP is right around 77, and so that would be your target to close above. However, we did technically close above that area back in October of 2020. So, keep that in mind that, Big C is one that has closed above the all-time high anchored VWAP and pulled back. However, it does seem like we're finally starting to bottom a little bit here, and we'll have to see if we can close around that 77.50. But I really want to see it close like at 80 to 82 for this to really get going. And it wouldn't be surprising to see a move up and then a retest of the anchored VWAP and then a continuation up. That's generally how these things work. If you have a breakout, you generally are going to retest that breakout zone. So that's one. Another one, this is a smaller cap name. I think Vissel is, I don't know, around $150 million market cap. That's generally the smallest market cap I'll trade or even look at. So VISL is one that I do have a position in, full disclosure, and I do like it for a couple reasons. One, it is holding this uptrend very nicely here. You can see that, you know, we did have a nice bounce off of this trend line support yesterday. And for those that like to use oscillators, definitely check out the Williams percent range. So I don't use a lot of oscillators, and oscillators just an indicator like the RSI that oscillates between two values. In this case, the Williams percent range acts kind of similar to the RSI, except it's a little more hypersensitive there. So one thing to keep in mind, and this is a divergence technique I like to use, on top of looking at lower lows on price and higher lows on the indicator, I also like to look at anytime you have a red day. So it happened back here right on the trend line support. So back on May 11th, you had this red candle. You had a hollow red candle. So technically we closed higher than what we opened at. And that's why it's a hollow red candle. It's red because we still closed below the previous May 10th close. But notice here what happened. You've got a red day close, but you have the Williams percent range actually increasing that day. So anytime you have a discrepancy where you've got a red close, but you've got an increase in the percent range, and actually let's change this to 10. I like to use the Williams percent range 10 because that's looking at 2 days of data, or excuse me, 2 weeks of data. So 10, a lot of people look at the RSI and they're like, oh, the 14-day RSI, that's 2 weeks. Well, there's only 5 trading days in a week. So a 14-day RSI, it may be your default RSI, but 14 days is really random. It works a lot of the time because everybody else is using it, but I like to keep it kind of mathematically clean, right? So that's why I like to use the 65-minute chart. Brian Shannon taught me that using 65-minute candles you're going to have 6 even candles for the day. There's 390 minutes in a trading day. So 390 minutes divided by 65 is 6 even candles. If you're using a 60-minute candle, you're actually looking at 6.5 candles for the day. So that's why I don't like to use the hourly chart. I like to use the 65-minute chart. And same reason why I like to use the Williams percent range 10, because we're looking back 2 weeks with 10 trading days. That's 5 times 2 is 10. And that's a little more of a mathematically, logical input to use rather than 14. So just a reason that I like to use the 10 as well. Same reason why on the weekly chart I like to use the 8, because I like to look back 2 months. So there's 4 weeks in a month times 2, that's 8. So when I am using the Williams percent range on the weekly, I will use the 8 instead of the 10. So just a little bit of a background on some of those inputs and why I use them. So all in all, I am really liking VISL here. I think my average is 257-ish around there. And so I definitely have been pretty tempted to sell some of these spikes, but I do actually like this for the longer term side of things. If you look at the weekly chart, we've got this symmetrical triangle forming, and you'll see that, if we do finally break out of this at some point, that would kind of get the move going a little stronger. Now, if you anchor a VWAP from this swing high from February, it's not shocking that we've been getting rejected here. This is the VWAP, the volume weighted average price, and you can see how many times we've been rejected over the last couple weeks. 1, 2, 3 again this week. So it's not a shock that we did get rejected there, because that's just going to be your first level of resistance, being your break-even zone for shares that have traded since the February high. So that's one to keep in mind if you like small caps. Generally, it has a decent amount of liquidity there as well. Now let's go into some individual names and requests. So let's go to the top because we did have some other ones. So I went over Tesla, went over NNOX, ATOM. I'll go over that one quickly. I don't really follow this name, so I'm not going to have too much as far as previous annotations up here. But if we started this kind of from scratch, first thing I would do is look at what's the anchor VWAP from the swing low. You'll see here that we did break down below it. So if we did continue up, your anchored VWAP from this May 11th low would be right around 2180. So that would be definitely a zone above that you may find some resistance at. That's on the daily chart. On the weekly chart, you'll see here, let's anchor the volume by price from this high here and see what's going on. Yeah, so you'll see we're kind of at this this volume node here. So, you know, this is definitely an area where price could bounce and a pretty strong wick here. I mean, we hit a weekly low of 1848. We're back at 20.6. So that's something to keep in mind. And same thing, we had 4 really strong weeks in a row. We bottomed at around 13. And we went all the way up to around 30. So, you know, a retracement is not unhealthy. You need these retracements to continue higher. I'm not a big Elliott wave person, but definitely stocks go in these types of moves. They are technically waves. I just don't get really into the counting of the waves and all that. It gets a little crazy for me. But Elliott waves definitely are something that are real. It's just, it can be very subjective a lot of the time, just like all of technical analysis. But all in all, my point here is that anytime you have an impulse move up, you need to have at least some type of correction to continue to the upside. So that is ATOM. AMC is one that I'm sure a lot of people are watching. Let's just look at a single chart here for now. So the main thing I'm watching here on AMC, one, is the gap below. That's definitely something to keep in mind. So let's make this a little bigger. So your gap below, shown by the gap snake here, is right down, starts at around 35.65, and the gap would fill right around 33.50. If we anchor a VWAP from the swing low here, you'll see that we missed it by about 75 cents yesterday. And honestly, not a bad setup here on AMC after yesterday's what I would call probably a capitulation event here. But it was pretty obvious that this was going to break down further after we did break down through this this previous support line on July 6th. So anytime you have a breakdown like that, it's definitely something to consider, especially if you had a wick the previous day and then you close within that wick. That's generally a sign that you're probably going to continue down. Same thing to the upside. If you have a wick on the upside and you close within that wick, you're probably going to continue up. So that's a really strong pattern that I like to see on the candle side of things. Workhorse. Oh, look at that. Perfect gap fill on Workhorse. You really can't make that up. So on the daily chart, we finally filled that gap from the June 3rd gap up. And like other names that are kind of in this growth sector, you had a pullback. You're still hitting higher lows on the short to medium term trend here. There is still a gap above around 31 for Workhorse, so we'll have to see if that ever fills. But you know, as I mentioned, this is healthy to have pullbacks like that. That's how you get new buyers and new holders into the trade. Viacom, VIAC. Let's see. Yeah, this one had a little more of a pullback than I would have liked to see. However, once again, if you're defining a trend is higher lows. So you have higher lows, and we're still hitting a higher low here from yesterday. So let's just delete this because it's kind of irrelevant now. The main thing here is the fact that we are bouncing at a higher low. This is just a weird chart. I mean, to be completely honest, it's just after the whole blow up of Bill Huang's, or Huang, I'm not sure how you say his last name, after the blow up of his hedge fund and Viacom being a massive part of that blow up, this chart is really kind of broken, at least in a medium term side of things. You don't have a lot of upside levels to watch. You really have to go onto the monthly chart to get any idea of what's going on here. Now, if we do that, this is what I would watch. You can see here, if we anchor the volume by price from this swing low here, you'll see we've got a huge volume shelf forming here. So as I mentioned, this is why you want to go on a longer term side of things on the monthly, because you get a much better idea of what's going on. A huge volume shelf kind of base forming here on the monthly chart. And if we did it on the weekly chart, we'd pretty much use the same inputs here. So we just anchor from this low. You'll see that monthly chart is also forming. And you have a little bit of a rounded bottom forming on the weekly side of things. So all in all, I like Viacom. I think it could definitely have a boost from the Olympics. I think a lot of people are going to be watching it on TV, especially because there are no spectators allowed anymore. So I do think this could be an Olympics type of candidate. I think VISL, VISL that we just went over, could be one. I think Fubo could also be one. Let's just look at Fubo real quick. Fubo, let's look at on the daily chart. And you'll see here, I guess I need to anchor the VWAPs again. You'll see here that, I mean, the anchored VWAP worked really well on this. Now, I have the swing low anchored VWAP here. And then you see that on May 13th, 2 days later, we kind of broke down through it and then popped up. I want to anchor another VWAP from this point here, from May 13th. And this is what creates a handoff. So you can see here I highlighted that. The next handoff point would be this candle here. This is the last time this candle tested this handoff anchored VWAP before going higher. So this is why I would want to use another anchored VWAP from this candle here, because it's the last time this candle tested this handoff anchored VWAP. This is a process and a style that I learned from Brian Shannon. So definitely a shout out to Brian. He really taught me pretty much everything I know about anchored VWAPs and anchoring in general. When I first heard him talk about anchoring, I was very confused. And so he taught me a ton about that type of thing. You can see here now, over the last couple days, the price has really respected these anchored VWAPs, and we got a perfect bounce off that swing low anchored VWAP yesterday. And all in all, you know, same thing with all these other growth names we talked about. It's healthy to get a pullback. We're still hitting higher lows. The trend is intact. Let's see here. I already went over Wish. I'm getting a lot of Wish requests, but we already went over that one. Cardano will hit $10 in 2025. Maybe, I'm not sure. REGI, not sure what this is, to be honest. It looks decent. You know, if you anchor the volume by price from the swing high here, you'll see that we are kind of running into the point of control. Point of control is simply just that biggest volume node. So if we do break above the point of control, that would be something to keep in mind going into the coming weeks. If we look at the weekly chart here, a pretty strong weekly chart as well. And if you do anchor the volume by price from a much farther anchor point, you'll see that still, even from 2019, you have a ton of shares holding here, which is creating a nice launch pad. So honestly, REGI looks very strong. So Jigglypuff Doc, that was actually a nice request. This is looking pretty strong. So definitely put REGI on your watch list going into the week ahead. Apple, we can look at Apple real quick. We have about 5 more minutes here. So Apple was one that I've been watching definitely pretty closely over the last month and a half or so. So I think I posted a chart about this around here once we finally got a nice green candle after 5 red weeks in a row. And we got the breakout. The target above was the all-time highs, which is just kind of a natural next target above. And notice here that I'm not using fib extensions because we had a point of reference to look at up until this point. Now, as we start to break all-time highs, this is where I would pull out a fib, because we don't have any other price action above this high. So this is when you want to pull out the fibs, do a measured move from this point here. So if we do continue up, the 1.618 extension around 163 would be your next target. Now, we have had 1, 2, 3, 4, 5, 6 weeks in a row. That is, in my opinion, getting a little overextended. Now, you can always go in and back test that. So if we go to the strategy tester, we can go on Apple and look on the weekly chart. and we can simply go in and test condition, candlestick pattern, 6 green candles in a row. What's the return after 8 weeks, which is 2 months? We can test that out, and you can see the average return after 6 green weeks in a row 2 months later is actually another 7.13%. So even though it looks overextended, if we go back and test this, you'll see that 19 positions have happened over the last 41 years for Apple, and the average return is 7.13%. You have a 68% win rate after 2 months once 6 green candles have happened in a row. So if we look at this on the chart, you'll see that this is what we see. So let's turn off the strategy tester. Let's turn off the fibs for a second, and you can see, the strategy tester tells us here's our entry long because we had 6 green candles in a row. So this is when the back tester is taking the long because our condition was 6 green candles have to close in a row. So this is when it goes long. 8 weeks later, back in 2019, Apple was up actually 16%. So the back tester on TrendSpider is really powerful, especially if you are looking simply at these types of 6 green candles in a row type of moves. So honestly, I wish we had more time to go over more charts. I mean, I'm going to be on again on Monday, so definitely join on Monday afternoon, and we'll try to touch on some of these charts. We just don't have any more time left, unfortunately. But all in all, the markets are looking pretty strong. Definitely you're going to have red days in the market. You're not going to have green days every day. It's just it's not healthy, honestly. You need these resets in price. So all in all, Apple, Amazon, these are your leaders right now. That's why the markets continue to go higher, because remember, these indices are a group of stocks. So you kind of pass the baton. So the fact that Apple and Amazon are finally starting to move after these range-bound kind of just doldrum type of price action for the last 8 to 10 months, these moves for these bigger names like Apple and Amazon are what are going to help the market go higher over time. They're kind of taking the lead now, and that's what's helping the market still have some strength into July. So all in all, I really hope this was helpful for everybody that was watching. We had a huge turnout. We had 240 people live. That's definitely, I think, the biggest turnout I've had on one of these Benzinga streams. So thank you, everybody, for watching during your Friday trading, and hopefully this was helpful for everybody. And remember, I will start back up on the regular Monday show next week. And I'll hand it back over to the Benzinga team. And everybody have a great weekend, and we'll see you on Monday. Well, I think we are. Anyone there on the Benzinga side? I think we're still live. So until they jump on, let's just look at one more. Let's look at SPCE. This is one that I had a little fun with yesterday. Created this rocket ship here. The SPC is one that looks pretty good, honestly. A little bit of a pullback today, but we also had a 17% day yesterday. I like to have fun with charts too. I don't like to keep it all serious. This somehow looked like a kind of like a airplane dash space type of vehicle yesterday. So if we do continue to break out of this area, definitely keep this in mind, that we could continue higher and possibly test that 57 area going into the week ahead. So I see Spencer's back on. I will hand it over to him. And
to wrap, guys, we'll see Jake again on Monday. Jake, we'll see you on Monday at the usual 5 o'clock time. Guys, smash the like for Jake Wujastyk for TrendSpider. Learn more at TrendSpider.com. And have a good weekend, sir.
Hey, thank you, guys. Thank you, everyone, for watching and all that good stuff.
All right. We'll see Jake again on Monday. All right, guys, we got a premiere coming up right now. We interviewed Be Real. He was banned from SNL. It's complicated. It involves Conan O'Brien and Seth Rogen. It's a whole thing, but that interview is going to premiere right now. This video will redirect to that. So stay tuned.